Okay, so if you've been on social media lately, you've seen them. The videos, the posts, people flashing these huge profits from day trading stocks or crypto. It looks like they've cracked the code, right? Just a few clicks and you're set. But is it really that simple? Let's break down the dream versus the cold, hard reality. I mean, this is it, right? This is the dream they sell you. The idea that you can just roll out of bed, grab your laptop, and make more money than most people make in a month, all before you've even had coffee. It's exciting, it's powerful, and man, does it look easy. So let's get on the same page. What even is day trading? Well, it's exactly what it sounds like. You're buying and selling things like stocks or crypto all within a single day. The whole point is to cash in on these tiny, super fast price jumps. And you gotta understand, this is the total opposite of long-term investing, where you buy something and hold on to it for months or, even years, hoping it grows slowly and steadily. And that idea of fast profits leads us right into the biggest, most powerful myth of all, the one that gets everyone hooked, the promise of easy money. So, on one side, you have this myth, totally pumped up by social media, that day trading is basically a personal ATM. But then, you have the reality, backed by actual data, that says the vast majority of people who try this, well, they end up losing money. And I want to be super clear here, this isn't just like my opinion. This is what academic studies and industry data show again and again. It's not a maybe. It's a well-documented pattern that shows the odds are seriously stacked against the average person. Okay, so if the odds are so bad, why do so many people think they'll be the one to win? Well, that brings us right to myth number 2, this illusion of control. The belief that if you're just smart enough or quick enough, you can outsmart the entire market. You might think it's a simple game, just your skill versus the market's ups and downs. But the reality is, there are two huge forces working against you that you probably don't even think about: your own mind and the competition you're really up against. First, let's talk about the opponent staring back at you in the mirror. It turns out that your own personality, the very thing that makes you you, can actually be your worst enemy in this game, pushing you to make bad calls. So check this out. One study found that people who are more extroverted, more outgoing, also tend to be way more overconfident in their trading skills. What does that lead to? Well, they're more likely to pay too much for an asset, and they're more likely to buy even more of it when it's already overpriced. So yeah, your own brain can literally trick you into making terrible bets. 6 minutes. Just think about that number for a second. 6 minutes. In the world of high-stakes finance, what could that possibly be? That, according to one study, is the median amount of time an individual investor spends researching a stock before they trade it. 6 minutes. So you have to ask yourself, is 6 minutes of research really enough to outsmart the pros? Is it enough to understand a company's entire financial situation? Probably not. Because that is who you're competing against. You're not just playing against other people on their phones. You are going up against hedge fund supercomputers. You're up against trading algorithms that can react to news and make trades in a fraction of a second, literally faster than you can blink. It's not a fair fight at all. And all of this brings us to the final and maybe the most dangerous myth of all. People hear stocks and crypto and they think they're investing. But day trading and investing, they're not the same thing. Not even close. So the myth is that you're an investor, but the reality? The whole setup of day trading, the fast pace, the instant results, the high risk, psychologically, it has way more in common with gambling. And here's why. Every time you make a trade, you get instant feedback. You won or you lost, right now. This creates this intense adrenaline rush. Your brain gets a little jolt of excitement from the action. And that immediate feedback loop is the exact same chemical process that makes slot machines and sports betting so incredibly addictive. It stops being about a financial strategy and starts being about chasing the thrill. So let's just lay it all out, crystal clear. Investing is a long game. You're buying a piece of a company because you believe in it, and you're planning to hold it for months, maybe years. Trading, on the other hand, is all about taking advantage of tiny little market jitters that last for minutes or hours. They are two completely different worlds. Okay, so let's put it all together. Let's look at the real bottom line here. What all this data tells us about the very real risks you're taking on. Researchers found this really dangerous psychological trap that people fall into. It starts when a trader has a bad day or a bad week, and they start losing money. Naturally, their confidence takes a hit, so what do? They start hurting. They stop thinking for themselves and just start copying what everyone else is doing. But here's the kicker. The research shows that following the crowd actually leads to even worse performance. It's a downward spiral that's really hard to get out of. And trying to recover from those losses? It's way, way harder than you think. The math is just brutal. Think about it. If you start with, say, $1,000 and you lose 50%, you're down to $500. Now, to get back to where you started, you don't need a 50% gain. You have to double your money. You need 100% gain just to break even. Climbing out of that kind of hole is almost impossible for most people. So next time you're scrolling and you see one of those flashy posts, just remember what we talked about. Yeah, the idea of fast money is tempting and that adrenaline rush is real, but the facts show a completely different story. It's a story where the odds are against you, where your own mind can work against you, and where the financial risks are huge. And the final question you really have to ask yourself is this: is that momentary thrill really worth the risk?